Hello, everyone, and welcome aboard. Thank you for joining us for Trading Buddies this Thursday, the 9th of March. 9 days into a change of season and 9 days into I was going to say the abyss, but it's not that bad. For me, I'm feeling a bit of a disconnect with the market at the moment. It's just a little bit frustrating, I've got to say. We'll endeavour to fix that in the next couple of days or so. And I'm hoping that gold will lead the way. We'll see how that pans out. We'll talk a bit about gold a little bit later in the show. Those of you who are joining us for the first time, welcome. Thank you for that. It's nice to have you on board as our trading buddies. It's a show that really is for you guys. It's all about sharing, and it's all about sharing ideas, about sharing charts, about sharing trades, about sharing happy times, about sharing bad times in the markets, and trying to become better traders at the end of the day. So if you are up for that and want to share something that you've noticed in the markets, or something that you want an opinion on, then feel free to put it in the chat box. If you want to come on camera and share something, share a chart, share an idea, then that is also encouraged rather than discouraged. So welcome. Those of you who are here for the first time, we hope you get something out of it. Hi, Paul P. Hope you're having a good week. Not like me. I'm not having such a good week. I generally have a poor start to the year, and this year's no change, I've got to say. We need to catch up, but that has to come in a natural way. You can't force it. It just has to come as it would in your normal course of events. Right, let's get stuck in and have a look at gold. Where on earth is that gone? There it is. Sorry, guys. Have a look at gold and see if we can find a winner first up. Hasn't been going too bad, this gold breakout, if you're prepared to take profit at the support and resistance areas. As I said, if you're looking for major follow-throughs, like I have been, not so much on gold, but on other things, disappointment is right around the corner, I can assure you. However, and I hate to say this, of course, most of you would have been warned, or at least pointed to this game changer bar on Monday. And need I say more? Look what happened. Small game changer bar. And look, the market at times is driven, the market's driven. Ash is here? Ash is not here, I don't think, so I can say it. The market is driven at times by fundamentals, and okay, it's driven a lot by fundamentals. And of course, we saw that on Tuesday with this big bar as a result of Fed Chair Powell's speech. And of course, that was what converted the game changer bar into a fantastic result. No, I didn't trade it. I did not trade it. If you're in my Telegram group, I pointed it out, but I said I wouldn't trade it because of proximity to the weekly pivot. I want to see a weekly pivot bounce back to the daily pivot, and then I'll enter. The news didn't allow me to do that, so it smashed through there. Anyway, we'll talk about that a little bit later, maybe. Today, we're focused on, and of course, that would have been a fantastic result for the breakout trade, of course. But like I said, if you're prepared to take profit at the support and resistance areas, then you're going to get a far better win-loss ratio than would be the case if you're trading these bigger breakouts, which don't occur that often. That said, there was a good one there, and there was a good one there. So maybe we need to perfect this. Well, obviously we need to perfect this. Today, what have we got? And those of you here for the first time, what we're attempting to do here is catch the breakout of really the Asia session as we go into London session. We haven't got that long to go, so we're on the hourly chart. What we do is we isolate the Asia session, which begins here on this candle. So we take the high of that session, which is this candle here, that one. And we attempt to go long above that candle. And then we isolate the low, which is this candle here. And we attempt to trade the breakout of that range, either long or short, doesn't matter. We don't care. Those of you looking at this chart will recognize from if you're aware of the slingshot, hang on a second, I've just got to check the waiting room. It's hard to be a producer and presenter and a trader at the same time, but we'll get there. So back to where we're going. So London Open generally is a time of higher liquidity than previously, or for the previous 8 hours of opening or 10 hours or whatever it is. And that's why we try to catch this breakout of that range. Today, we've now got a range of high 1816.45. I think that's about right. 1816.49, actually. We'll call that 1817. So that will be our entry for the long if we're going to break out to the high side. Very obvious DR1, take profit here. And the reward here is really, really good, given that we've got such a tight range today. The entry for the short will be underneath this bar here, which is the low, of course, at 1811.91. So we will call that 18, was it 11? Yep. So we'll set that in place. Now, again, if you're here for the first time, this is a trial. This is not a proven system of trading or proven strategy. So please do not, if you are going to follow this, put any meaningful money on the table. You can see I'm trading this at 0.03 of one lot, which is, next to nothing. And that's exactly what should be done while you're testing a system. So the buy is, as I said, at 1817. So we'll put 1817 into the order box, and the stop loss will be underneath this candle, which will be the bottom of the range, right, at 1811. So that will be our buy order. Now our target, as I said, will be pretty clear. It's not only DS, well, it is only DS. What's that? Is that the monthly pivot? Surely not. No, there's the monthly pivot up there. I don't know why I've got that highlight. But anyway, DS1 is our obvious level. DR1 is our obvious level. And that level is today 1821. So that will be our take profit. There's no TP1s here. It's just straight out trade. And that is the buy order. Okay. The sell order will be the reverse of that. So it will be also a stop entry order, or a sell stop rather, at 1811. So the same value as the stop loss for the buy. The stop loss for the sell will be the same value as the stop loss for the as the entry for the buy, right? Which was 17, right? Yeah. And the take profit for the short is a little less obvious, but I don't want to trade through there without taking our profit. It's a bit silly, really, to take that short because you're only getting, what, $1.50 or something. We'll go with DS1 as our take profit, 1807. 1807 is our take profit. Not a great reward to risk. We'd much prefer to go long than short. Okay, so both orders are in place. What happens next? Well, if we get triggered long, we cancel the short. If we get triggered short, we cancel the long. It's as simple as that, and just let the trade run to target. Okie dokie. That brings us up to speed. Now, there's a lesson there's a lesson to be had here in the next little segment I'm going to bring you, which is all about fixating on a particular setup or scenario. And I'm guilty of this in the last few weeks. And it's CAD Swissy. It may pay off, right? But at the moment, I'm just going through a world of daggers in the heart. You know, it just keeps giving me bad results. Mind you, I've only traded it 3 times, one for a break even, one for a loss last week, and this is a potential loss also. But I'm still confident we'll get the money here. Am I a victim of circumstance? Maybe I am, because we got this candle last week as a result of the Powell speech, and we got this candle yesterday as a result of the Bank of Canada. So all is not, going in fundamental favour. But the reason I'm bringing this up, apart from updating you on to where my trade is up to, I've gone long, not just because we got a game changer bar yesterday, it was 2 days ago, Tuesday, we got a game changer bar, but because it also set up as a false break of support. So break, consolidate, back above, retest. So I put my entry above this bar, and of course, they're looking over your shoulder, right? You know that. No, they're not. We got tipped in. Well, I got tipped in, and immediately we got taken back to the daily pivot, and of course, then the Bank of Canada made their announcement, which was keep interest rates on hold, which was the first of central banks, of course, that have done this in recent times. The RBA, for instance, and I think the Fed, and just about everyone, not everyone, that's not true. But the majors, apart from the Japanese yen and the euro, and okay, the pound, have been raising interest rates 10 in a row for Australia. That happened on Tuesday. So what we've now got is the Canadian Central Bank, or the Bank of Canada, if you like, saying that conditions are such that we know. No, that's not true. I was about to say that we don't need to raise interest rates anymore. They didn't say that at all, but they're in a pause mode. So the market didn't like that at all. The CAD sold off and all the rest of it. We know this, but we know the result. My hope is that common sense plays a part here, and that's not such a bad thing at the end of the day. We're still relying on this double bottom, which is an all-time low here, right? That's why I'm so keen. And like I said before, and the lesson to learn is don't get fixated on any particular thing, because if you do, you're stuck. And the reason I say that is because I can't now trade anything against the CAD or anything against the Swissy without having to adjust my risk, because I'm at risk still on CAD versus the Swissy, and I have been for weeks. And that's just not right. Okay, if you get a perfect setup, trade it. That's absolutely the way it should be. And pretty much that's what I've done, to be honest. But at the end of the day, I'm stuck in this mode with CAD Swiss. So it eliminates me trading the Swissy, it eliminates me trading the CAD, unless I'm prepared to, as I say, aggregate my risk. That's the lesson. And I don't want you guys to get stuck on any fix idea that this is going to happen. It has to happen. That's bullshit. It doesn't have to happen at all. There's no such thing in the market. The market will do what the market wants to do, and we can't control it. We never will be able to. We're followers. We're not leaders. It's as simple as that. So here I am again in drawdown on Canvas, the Swissy, for the second time in 2 weeks, and I'll just let that ride. The Bank of Canada hasn't helped at all, but I'm still of the opinion that this double bottom will hold, and hopefully we get a higher low there at some stage and get back into profit. The good part is I recognise this fixation that I've had with it, and I'm only trading at 0.25%, so it's not the end of the day if we do lose. But losing is not a good sport. Not a good sport at that. Anyway, let's leave CAD Swissy. You know, we've spoken about gold. There's a few things today that were interesting that popped up, and my watch list today consisted of a few of these. Where is it? Euro Aussie. There's one. Euro Aussie. Been tracking this all week as well. No, I'm not fixated on it, but I'm tracking this, and the reason I am is pretty much the same reason in different circumstances to what I see on on CAD Swiss. And that is that we are at a substantial level. This line here, 158.90, represents, a mass of support and resistance areas. Resistance through here. False break resistance there, support here. Again, a bit of a stall there. More support here before it cracked. Then resistance here. You can see those beautiful closes here. Incredible on that exact level. Then a rejection here. Now we've got a case where Euro Aussie is poking, and I'm on the monthly chart here, so it's a significant level, has poked this bib through the top of that 158.90 level. And now I'm really keen to see what happens next. Weekly charts suggesting that we're still full of running. Daily chart, not so much. There's the momentum that has been forthcoming in the past few days, and now I'm looking for this to temper as it is. But what I need to see really is price to come back below that level that I've indicated, 158.90. Then I'll look for a short back to the trade line, and there's a beautiful confluence here somewhere with that monthly pivot as well. So I think Euro Aussie is high on my, I was going to say wish list, watch list is where I need to be. So 4-hour chart, you bet I've got that pegged already. And if we do get a breakout here, in particular if it doesn't take out the high, then comes back underneath the line, retests it from below at that confluence area, happy days. I'll be all over that like a shark on a mackerel. That's Euro Aussie, and that's high on my watch list, as is Kiwi Yen. Why Kiwi Yen? Where can I find Kiwi Yen to start with? That one? Yeah. Okay, so Kiwi Yen, and of course yen is this incredible beast that's very, very difficult to catch at the moment. But Kiwi Yen is showing me, and it's already there. Haven't chosen to trade this. I'm not sure why, to be fair. It is a setup. I think I went a little. Yeah, I know why. So we've got a resistance trade line here at a resistance area. Price has broken above that resistance, that horizontal level, come back below not only the horizontal level, but also the trade line, but also this range that we've got developing here and has been for quite some time. Then we've hit the monthly pivot. We've retested the trade line. And now we've got this awkward situation where we have to put an entry at support and maybe a stop loss above the weekly pivot. And that's the reason I haven't taken this, or one of the reasons I haven't taken this. I'll show you the other shortly. And like gold, I may regret this, but 88 pips, there's no support until we get down to here. So the reward to risk is around about just a little bit short of 1-to-1. But the problem I've got is the market structure. And the market structure is, to my mind, clearly an ascending channel. And the latest touch off that channel is from below. So it's off the bottom, it's off support. So I'm not expecting this to do anything but test resistance again. And that's the problem. I don't want to trade this short. Yes, it's in a mess here and it's not clean. I 100% see that. But really, I like to trade market structures top to bottom, bottom to top. So I really can't get interested in a short here right now. So I'd have to look for the alternative. If I miss the short, then so be it. But I'll be looking for an alternate way to trade it long. So those of you who are wondering why I haven't traded that, that's the reason why I haven't traded that short. like gold, if it goes, it goes, and I'll be going, geez, I'm out of touch with the market at the moment. Pound Kiwi is the next, and Pound Kiwi, another market structure that suggests to me that we've been in a range since late 2022. And again, we've got false break. I haven't got a third false break, which is somewhat of a concern, but we are back inside this range, and I'm very, very keen to find a reason to trade this short back to the bottom of the range. Maybe need to take profit just about the middle area, somewhere around here, but that's okay as long as we can get in the market up here. The pivots are a bit of a problem, I must say. But if we can get clear of those or even use those as resistance, then happy days. Current candle it's forming is somewhat interesting to me on a 4-hour chart. I think an entry below that candle, maybe need to get your stop loss up here, but taking profit at the monthly pivot and then letting it run down to here makes sense to me on pound versus the Kiwi. Euro Aussie I've spoken about, and the only other one I wanted to talk about, which is very, very much aligned to CAD Swiss, is Aussie Swiss. Now, Aussie Swiss, not at an all-time low, but certainly at a support level. The all-time low is down here, but that support level, if it cracks, it's got really big repercussions for the Aussie from a technical point of view, or the Aussie versus the Swissy from a technical point of view. There's nothing underneath here. It's like a chasm, it's like a void. So if this level actually cracks, Aussie versus Swissy disappears off the planet for a period of time. That's why I think there's a potential to buy this currency pair. You can see the triple bottom formed here. You can see the range that we've been in. You can see the false break of that range. You can see that we've come down to the bottom. What we can't see right now is an opportunity to trade it long, certainly not off the weekly. But I don't need to have too much go right here for me to get a setup. So we've got the potential bounce on the daily chart. Be Monday or probably Tuesday even before I see a higher low. But on a 4-hour chart, it's completely possible because on the 4-hour chart, we already have a double bottom as well. So break and retest of resistance, not my preferred way, but if price were to come back to this level here, which is 62 the figure, then give me a higher low, I'd be into this again very, very keenly. There's a decent reward before you have to take too much concern, right up to about 100 pips there of reward. So if you can get into that off maybe a 15, 20 pip candle, something like that on the 4-hour chart, wow, I think that's a really, really good opportunity. Aussie Swiss long, and can't wait. I think that's a really good one. As I said, similar to CAD Swiss, but not exactly the same. And like I said from the outset, being fixated on this CAD Swiss is, or has been, preventing me from exposing myself more against the Swissy long. And Aussie Swiss, CAD Swiss, very, very similar trades. They're both risk-on currencies versus risk-off currency, risk-off currency. So would I trade it? I would add to my risk if I saw this setup, because I think this is a perler. It's actually better than CAD Swiss, to be honest, on a short-term time frame. We shall see how that pans out. Just checking on gold, hasn't broken out of the range yet, which is cool. I've spoken about this before, has been a potential breakout on our system, but it's also suggesting to me that it's a false break of that support level. Had a little bit of a bounce off that 1811 or 1812 mark, really, which is what that is. Daily pivots in the road, but I wouldn't be too concerned about that now. I think an entry above here somewhere, which is pretty much where we've got our breakout trade entry, makes perfect sense to me. So I'd like to see this go long today, if only for a short term, because as you know, I'm extremely bearish on gold because of the chart pattern. But it's got its work cut out for it to get through this level, to be fair. at the moment. If it does, then look out. Gold's back down to the 1600s somewhere, I reckon. We'll see. Everyone will have an opinion on that, of course. And where do we start to buy gold, or where do I start to buy gold is the question. And as of this moment, I can't answer it. But down here, looks like a reasonable idea to me, around about 1750 mark. We shall see. Ash, how you doing, bud?
Yeah, I'm doing very well, mate. Very well indeed. I think your points on the CAD Swiss are very good, and I don't think everybody would probably agree that they wouldn't like to see you expose yourself anymore. So
you got that right.
Yeah, going well, mate. There is a potential trade here if people are interested that I have just got into, which I will quickly share. It is and interesting actually, again, because it's another one of the currencies that you spoke about. It is this this pound Kiwi, and is, you know, and I've also gone for the short with this one. A very brave person would be quite happy to put a stop loss just above these 15-minute bars here, but I haven't done that. I think that there could be just a bit more volatility, and it might well, you know, come all the way back up and continue to the upside. But I'm completely in agreement with you that I think stops are probably better off at the highs on the 4-hour, which is just on top of this bar here. Could probably, maybe I might have to push them a little bit higher, but we'll see. I actually, I don't think I'd like to see it start to trend towards that area anyway. So I'll probably close the position if it does turn around here. But if you look at this, there's quite a lot that suggests downside, and there is some reasons to look for a short in the pound as well. But this is the first thing, of course. We got this this head and shoulders pattern, which does suggest to me that that we could be going a little bit lower here. Oops, we got that there, and we got this one here, of course. So we got this this lovely head and shoulders pattern, which does suggest that neckline somewhere in this area down here. And actually, if I take this away a moment, because it's not going to appear on my other template, but what we have seen is so far anyway, 15-minute rejection of these this daily pivot, which is why it looks like a decent area, and stops just above the other pivot up there as well. So there's a few reasons that I think that that the market could turn somewhere in this area, somewhere in this area, but I'm not entirely sure where. And I'd feel comfortable up here, no problem at all. But if it starts to get through there, then I don't think I'd want. I probably won't have a chance to get the stops off. But I don't think I'd want to be in it if it starts to get above this this trend line up there. Monthly pivot looks like a fair target, so just above that monthly pivot, just to kind of take in spreads. And also, you know, one thing about these things, and I got into a CAD yen yesterday short, which I closed the position after not too long, because it really did start to motor. And I think some of the reason that we're seeing weakness in the CAD is that they are the first bank now to have held interest rates. So it suggests everybody else will be playing
in the opening.
Yeah. So everybody else will probably be playing catch up with the with a Canadian with a Canadian dollar. So because of that, it would suggest that, you know, that there is probably some room for some of the other currencies to actually move. And I traded it against the yen, which is, you know, not great. My only problem was that, you know, when you hold the CAD yen, then you're going to lose some money on the swaps because of the interest rate differential. At least with something like this, if you're having to hold the pound Kiwi short, then you'll actually get a little bit back. You get some positive swaps, not much, because it's a much slimmer kind of band between the pound and the Kiwi. But this one looks like a relatively decent opportunity, I think, to maybe come down and test that area rather than pushing higher. Looking on the hourly, this looks like the area that it may well come and have to have a look at before it does fail. So I put my trade on around the pivot, because the pivot looked like a decent area of resistance, but it does keep trying to gnash up against this area. So that's another area. That's another area. If it gets through there, then we're probably potentially going to see these highs again. So let's see if it drops. Now, the reason that I am looking for pound short is that we have had just some like slightly more dovish comments earlier in the week from a Bank of England member, and it would suggest that they don't want to go too fast too soon. So I wonder whether there might be just a little bit of a hangover from that. Some of the data from the UK has actually been pretty good this week, surprisingly good, has to be said. Halifax House Price Index, 1.1% from 0.2%. That's the biggest shocker, because obviously with interest rates going up, there has been sort of reports that the housing market is starting to weaken. And if you read the PMIs, you read the construction PMIs, the construction PMI report was saying that the construction industry was actually doing pretty well, but down to because it was doing some lots of work in the industrial sector, but the housing sector they actually sort of pointed to lots of contracts not basically being taken up. So definite weakness in the housing sector, when it comes down to the PMIs. But the Halifax House Price Index still manages to push higher. I suppose maybe the caveat is if there's less being built, then then you actually sort of like start to choke some of the supply. But the demand has definitely been choked because of the interest rate hike. So surprising to see that number coming in relatively positive. And with a mortgage rate now at 7%. It would suggest that there's probably further to come down for
7%. Wow.
7% mortgage rates. Yeah, even though I'm not sure where they're getting that number from, because I know a few people that have just applied for mortgages and they're closer to half that. So I'm not sure. Why that one's being reported. Maybe that's aggregate. I guess it has to be.
I think most interest rates here now, mortgage interest rates here now, after yesterday, was the RBA went, Tuesday, the RBA went again, of course, have got a 5 in front of them.
Right.
Yeah, seven would be concerning.
Yeah. Well, that would suggest, some weakness in the housing sector as well. So there may well be some pressure, from the pound, because the housing sector, it makes up such a huge aspect to the UK economy. I don't think the BOE are going to want to choke that too much. Lewis, nice one, mate. So he likes the pound Kiwi as well. So we'll see what happens with this one. We'll see if it comes down. Now, the other one that I did write up about the other day on the Telegram channel was oil, and it was when oil was at $80 here. After sort of seeing this, the kind of opinion that I had was that oil may well actually turn around the week, because we talked about this on Monday. You remember I showed you the chart of the seasonals with oil and how negative that was. I mean, that suggested that if anything was going to see any kind of bearish news or data, this would be the one to potentially follow. And of course, Jerome Powell came out and effectively said, we might actually flip from 25 basis points back to 50, and that sent all assets that were
the dollar just went nuts, of course.
Yeah, the dollar went nuts. This went down. Gold went down. So just a massive fall, and now gold has closed this gap here as well. So there's that was a little bit of an elephant in the room as gold was climbing, but now gold is.
No, it was a beautiful setup. It was a beautiful setup.
This one up here.
Weekly game changer bar. What was it? Daily game changer bar.
Okay, daily game changer bar. Yeah, this one here.
Yeah, little classic.
Yeah. So it's come all the way back down again.
Go on, ask me if I traded it.
Did you trade it?
No.
Well, do you want to know something that is maybe not as bad, but still bad? I did trade it, and I got in here, and I got out on the weekly pivot. So I missed a big move. It was I was looking at this 15-minute bar here. Was the one I traded, and it was it was a decent 1-to-1, so that's what I went for, and then it just collapsed. So maybe worse for me. I'm not sure, but it was a 7% move. From that point.
Well, remember we spoke about this on Monday, and Swedes said it was a full moon on Monday. Remember I asked you a question about Astronarchi, and
Yeah.
it was timed by degrees.
Yes.
Bang. Look what happened.
Yeah. Well, absolutely. Well, you actually mentioned this and oil, didn't you, when we were talking about the Astronarchi?
Yep.
And both of them have, of course, collapsed. Yesterday, Powell struck a slightly more dovish tone, if you like, if you want to kind of put the terminology into dovish or hawkish. He was slightly more kind of conciliatory yesterday, effectively saying, you know what, we are data dependent. And because of that, that makes not so much today, but tomorrow really interesting. Now, I have got the pound kiwi obviously in the trade, but actually, I think tomorrow is the day that that we could well see some genuine movement, even though today may set it up. And let's have a look at what that might look like, because actually, really, if we look at this, if we look at this for the rest of the week, then today it's all about the United States, really. I mean, we do have some PMIs from New Zealand, and we do have some inflation data from the yen, but the yen's data has not been great this week, and yet the yen has strengthened, and I think a lot of that is because of some of the weakness in the other markets. So it doesn't seem to matter.
The BAJ this week? Was that this week?
It is tomorrow.
Okay.
Yeah, yep. BOJ tomorrow. So maybe that's something to do with it as well. They're maybe sort of buying into that. But the data's been pretty poor from Japan all week. I was looking for just a little bit of help on Wednesday with some of the stuff. But look at this. This is Japan. The GDP external demand was the only decent number here. Even the M2 money stock was it was a little bit less, I suppose, but it was like this really sort of right the way across the board. Leading index was a bit of a miss and below previous, and some of the construction data. The average earnings were down as well. So no inflationary kind of pointers here. So nothing that would suggest that we should be looking at yen for the upside, really. But the yen did strengthen, and that is probably maybe something to do tomorrow. This is the other thing. Current account negative 1.97 trillion. So there was quite a few of these, mate. I mean, I was looking at them thinking, difficult to buy the yen, but and this is the other one, quarter on quarter
Absolutely.
GDP.
Has been for the last 5 years.
Yeah, but I did trade it. I did trade it against the CAD, but it was more to do with the CAD, and I quite like the setup, and that was also something that I put in the Telegram group as well. I just mentioned that I was looking for some CAD weakness and potentially against the yen. But it was difficult to kind of make the case because of these numbers weren't helping. But with the yen may still strengthen depending on what's said on the policy rate, and I suppose maybe this could help it out. But the news is really about the dollar, because we've had Jerome Powell come out and say that the 0.5 could happen again. We could get a 50 basis point rate rises from March. But he did say it was data dependent yesterday, and it's really about these jobs numbers. So this would help the market. This could help gold, maybe oil, definitely the NASDAQ, if that comes in with initial jobless claims higher than previous and higher than expectation. They are looking for higher than previous, actually. So if this comes in higher than expectation, that could really help the NASDAQ out. And then we go to the big one on Friday, the non-farm payrolls numbers. So if these come in weaker, and they're looking to come in weaker, then we might well see a bit of a turnaround in the dollar. So the dollar looks to me like the ADP was it was all right. It was all right, and this is the problem. It was a miss. Sorry, it was a slightly higher, actually. Yeah, slightly higher, and it was a beat. But there was another number that I saw that was a miss. It was this jobs number, JOLTS. The JOLTS was a beat of expectation, but it was less than the previous month. Only just. So the JOLTS numbers, didn't really help the market out much. But yeah, ADP was a stellar number, and obviously you get that plus Jerome Powell, statements on the over the last 2 days. and of course the dollar's going to strengthen. So that's what we have now,
you'd
mate.
you'd be pretty ballsy to take a position against the dollar going into those announcements. I would have thought.
Absolutely, yeah, absolutely, and you know, I suppose this is one of the reasons that I wasn't aiming for too much with gold, because that position was taken before the speech. So I thought, well, okay, you know, there's a setup to get some cash out of this before we get the speech. But actually, the better way to play it would have been get those stops at break even and see what happens, because then you get the chance for those, you know, 5 to 7% moves. But there's still chances tomorrow. So, you know, I don't think we're done and dusted really for the rest of the week. I think that there's a chance that gold rallies, and I'm looking at the Nasdaq. I actually quite like the Nasdaq today. FTSE's opened up very, very weak, and you know, it's basically come down to the trend line. There's a trend line down here, just along here. So it's managed to kind of come down to this trend line here and touch it. So it's within the bounds, but doesn't look particularly strong. Nasdaq I quite like it though. You know, if you look at the Nasdaq on the 4 hour, this is a really difficult bar, but this closing bar does look like we've actually got a higher high on the close. Does this provide us with a bounce?
I think, yeah, we're still on the calendar, mate.
Oh, sorry. Okay, yeah.
It looks a little bit like an aversion point to me.
This one here. Yes, I agree. I totally agree. So we might see some Nasdaq upside, and that's what I'm looking for today. I'm actually looking for some Nasdaq upside. Can we stretch our legs and start to go higher? I don't think I'd be aiming for higher than the monthly pivot. I think I'll be looking for
there's a decent level there. So
yeah, short-term move up. So really, it's going to be dependent on, you know, is there enough on offer right now above the daily pivots of 2 to 1? So if this does provide us with a break of that trend line and an opportunity, probably the trend line, this horizontal level here, and a return, if that would give us an opportunity, then that's going to look pretty good. That could be a 1.5 to 1. So I'm looking out for the Nasdaq today, mate. I'm just on the alert for that one.
What chart are you on there?
This is the 1 hour.
Interesting. There's a nice little slingshot candle pattern sitting there on your trade line. Interesting.
This one here.
It's a little bit off your trade line, but that little hesitation at resistance followed by a seller bar, that I like that.
Yeah.
On the daily pivot as well. Actually, yeah, interesting.
Yeah, it looks all right, doesn't it? And it's attempting to hold this low here currently. So we'll see in the next 22 minutes whether it holds that low. And if it does, structure's still in play for this potentially to show some signs of some strength. Now, it will probably be dependent on that jobs data. So I still think that if there's a setup before it, there's an availability to get into the trade, and then if the jobs data helps, the likelihood is it's going to go here. So we've got a few hours left, not long, but a couple of hours left for this to establish itself. But maybe close along this level by the top of this hour, and over the next 2, if it can come up, then we've got a potential entry. You know, if it retraces down for us again. So liking that, mate. I'm liking this one.
It looks interesting on that smaller time frame.
Yeah, well, this is on the 15, and this you can't do anything now anyway, because not
Sorry,
even the
I call
15.
I call smaller now. You call small a tick.
Yeah, well, the 15 is pretty much as low as I go. Every now and again I'll go to the 5, but the 15 is probably as low as I'll go for trying to get the information. And this is still moving lower. So okay, you could definitely sort of try and get into a trade here with this bounce along this level. But I think that there's maybe a safer signal if we can get above here, because you'd be getting in here with a stop down there. It would look really good there, actually. You know, if you could do that, that would look like well, it's going to be pretty much the same, actually. So yeah, but take out this level here, 12,214, move back to it, and then I think that there's a trade, and then the stops can be just under this area.
Cool. Is that the hot
that's
one?
everything, mate. Yeah, that's everything.
Brilliant. Let's talk about gold.
Yep.
And I think the reason I want to talk about gold is everyone's got their foot firmly above the accelerator button. Or sorry, what's that called? Accelerator, that pedal thing.
Yeah.
We've still got those, right? Yeah, in most cars. What are these EVs? Have they got accelerators?
I would have thought so.
Or you just tell them to go fast.
That'd be useful.
That's coming. Or you just sit in the passenger seat and the robot does it. I don't know. But I think everyone's got their foot prepared to press the accelerator on gold, right?
Yeah, yeah.
And yet it keeps, to my mind, proving technically absolutely spot on and perfect. I think this is a really tradable commodity. And every time I see what I'm seeing with gold, it's just behaving beautifully. I now understand why Ainsley, being a technical person that she is, chooses gold, apart from the fact that she loves it as a female, loves gold. I'm really impressed with them. I just want to be a part of it. And right now we're at a support level, so we're in a buy zone, which is why I'm not short. But the next opportunity, which will be a game changer bar for me probably, or a lower high, I'll be selling it again.
Yeah.
You're not of that opinion. You were completely opposed to that, right? Because you think right now is where you need to buy it.
In the short term,
right?
Yeah, in the short term, I think that there's a potential buying opportunity here with gold, but I do concur with you that I think that that this is probably coming down. Weekly pivot is the obvious kind of area right now, but that's we're only a day away from this weekly pivot changing, so that's that won't look like that area relatively soon. But I suppose 1836 would be a possible area that I would look at possibly selling gold. So I think that there could be a little bit of a push, and it really because I think Powell has now set up some weakness in the dollar. It really does depend on the data. If the jobs number does come in slightly weaker, and eventually it's going to turn. I suppose that's the thing. We've seen Google kind of announce loads of layoffs. We've heard it from Meta. We've heard it from various companies. I think Apple the same and Amazon the same. So we've heard these big companies suggesting that there are layoffs and things happening kind of in the US economy, which has not yet filtered through. Now I don't know whether that's because the service sector, let's say, is so much bigger, or the manufacturing sector is so much bigger that those companies don't really matter quite as much to the overall kind of picture for the jobs data. But if they do, if there's any sort of any hint that the manufacturing industry also starts to lay some staff off, then you'd think it would eventually be reflected through those ADP, NFP, JOLTS numbers, all that kind of thing, which would suggest that the dollar should weaken over the near term, and particularly also when you start to think about where the other central banks are, because the RBA have kind of come out and been relatively dovish. Even though they raised interest rates, they were quite dovish about their statement. The Bank of England are making noises about maybe they get
actually. I think just on that point with the RBA, and I'm not sure if this is the same with all central bankers, but the RBA is under extreme pressure from the government, from the media, to stop raising interest rates because of the hurt that's being caused. And Australia is very much a property-driven country. Property ownership is like a rite of passage here at the end of the day. There's so many investors and so many homeowners that are in, not or insubstantial mortgages, right? They're paying, I think, something like $2,000, some of them, extra per month than they were in March of this year.
Right.
Sorry, March of last year.
Yeah.
Or May of last year. So 10 monthly rises have caused them to pay $2,000 per month extra than what they were paying. Yeah, you've got to be on a fairly decent wage to be able to afford that extra payment per month. And the media is crucifying Philip Lowe. I mean, he's one of 9 people. The buck stops with him, I suppose. So they're under a lot of pressure. And I guess that has to weigh on their minds when they consider what they do next. And certainly in media conferences, he's admitted that. He has to take that on board. And I just wonder if that rhetoric that he's producing is more media and government pressure rather than logistics or common sense.
Yeah.
What I'm trying to say is he actually following what he needs to be doing, or is he under so much pressure, or the board under so much pressure from the government and the media that they have to adopt that dovish stance? I don't know the answer to that question, but it has to be a factor, I would have thought.
Yeah, you're probably right, mate. You're probably absolutely right.
And there are other central bankers under similar pressure. I don't know.
Yeah, I mean, I suppose one of the things about the RBA is that they have slowed the rate of increases. So they've actually sort of showed it with some action that they are getting probably quite close anyway, or they're certainly getting close to reconsidering what to do next. The Bank of Canada have just paused. So yes. I think that there's some pressure across the board for the central banks just to kind of get, they're all probably at that point now. I mean, when we're seeing it in the data, we see some of the GDP from Europe yesterday, 0%, GDP from Japan, 0%. We're seeing no growth effectively. China's come out and also lowered its growth forecast. So countries across the board are, central banks across the board are attempting to fight inflation, but they are seeing some weakness in their economies. So if the Fed follow trend, if you like, or follow what everybody else is kind of doing with the RBA, with the Bank of Canada, and with some of the stuff that the Bank of England have said, then there would be a pause relatively soon. But they do need to see some of their data really help them out. I mean, the disinflation seems to
stop. Would hope so.
Yeah, and this is some of the problem, because if we do see an uptick in unemployment, then that would put some pressure on the dollar, and it would also help gold, because just because there's an uptick in unemployment, it doesn't mean straight away that we're going to see a downtick in inflation that's significant. And obviously, with gold as an inflation hedge, that should drag it to the upside. That should enable gold to start to rally again. So it will be data dependent, and I suppose if it's not at this stage, then eventually the Fed will do enough to make it so the jobs data can turn and the CPIs can turn, because they can't raise interest rates, continue to raise interest rates with no effect. There's going to be something that happens, or there'll be no effect and they'll have to reverse. So I think there is a rally in the likes of gold, and I think that there's a decent chance that we get it here. But the big question is, do we get some relief in the jobs data tomorrow? That's really sort of like what we're after, or even today. Because that's what's going to drive gold higher and the Nasdaq higher. If we don't get those numbers today, then I would suggest that the Nasdaq long is probably not an opportunity, and the same with gold.
Fair enough. There's another thing that's come across my desk, as the experts say, in the last, I don't know, few days, that may be very much game changing. Why? I woke up, I think 2-3 days ago, was listening to the morning news, heard that we're preparing to go to war with China as early as 3 weeks.
What, Australia?
I'm going, hang on, I'm dreaming, right? I'm woken up out of a dream. But no, this seems to be the rhetoric. And Congress apparently, I saw on the news just before we came on air, Congress in America have been having all of these discussions with the intelligence people, or what do they call those things in front of Congress testimonies, right?
Yeah.
They've had all of these intelligence people answering questions from the Senate, and they seem to be poking the bear in China, right? And of course, this filters down to Australia because they're allies. And I'm going, hang on a minute, have we gone fast forward 2 years or something? And are we really, really talking about war with China? But they are. What the hell? Where did that come from?
Where did that come from? What are we
so
talking about?
You're not across that?
No, I haven't heard that at all. So we're talking about Australia. We're talking about the West.
Well, we're talking about America, which filters
Right.
back to Australia, right?
Yeah, yeah. I wonder whether that's something to do with what's going on in Russia. I haven't heard that, mate, to be honest. And it's a difficult one because there's always some tension between. There always seems to be some tension between the United States and China.
Yes.
So I don't know whether it's just all bluster, further bluster. There's always these trade kind of battles going on. But if we're talking about stuff like that, this is another thing that would push you towards gold. Now, the problem with gold, really,
that's why I mentioned it, right?
yeah. Well, that would seem like a decent enough reason. I mean, look at this level; it's a cracker of a level. And you were saying how respected, how gold respects these levels. It's a beauty. I don't know what it's like on the weekly. Yeah, it's decent on the weekly as well. Maybe a little bit lower.
It's a strong level.
Strong level of support here. So, and it could just poke its head through there and still kind of come up, as we saw down here with this strong level of support. It poked its head down, and then it did come up. So it might just come down a little bit further and still kind of look like it's going up again. The problem with gold, as I say, is the seasonal bias isn't for a strong gold market right now. That doesn't mean that this isn't a decent price, because it could kind of come up and float around and then start to trend later in the year, or it might completely ignore the seasonals. But that would suggest, what you're saying is maybe sort of like something of a medium, potentially a longer term play, which would drive people towards taking a position in gold. But I think initially, the short term has to be about the US data, and it has to be about further weakness in the dollar. And you look at this dollar, and it's similar in as much that you can see a level here. When we sort of, like, if we extrapolate this to the right, this is a decent horizontal level of resistance. There's the point there. There's points all over the place. It might have even been a little bit lower that it's managed just to get itself. No, it's right on there. Right on top of this. That looks pretty good to me. So technically, we are there. We just need fundamentals now to kind of take us down. Jobs data comes out strong today. The dollar's probably going through this level, I would suggest, as people start to panic that the Federal Reserve do raise interest rates into the March meeting at 50 basis points. And that's what this is about. It's not about rate rises, because they know there's going to be rate rises. It's about the accelerated pace of those rate rises. So a number which comes out benign, that may well be enough to see some dollar weakness, and again pushes back to a short-term gold trade. But over the longer term, I think maybe we see some gold up, down for a little while, and then maybe we could start to look at potentially buying it, because, as you say, mate, there's still a possibility that gold just absolutely just collapses and comes down to the trend line that we were looking at months ago, or trend lines, I should say, that we were looking at months ago.
Yeah. Well, like I said, I took 1,200 off the table a couple of months ago because that was my target. But then, you look at that chart, and like I said, that's the monthly chart, right? Like I said at the beginning of the month, if that's not a double top and lower high, I'm not here.
Yeah. Yeah. I wonder whether we might see, we might well see this level tested again. But this area looks like the strongest. If you put this one along here, that looks like the strongest possibility to me.
Is that 16 something? Where I
have it? 1560 on the futures, 1570 on the futures. I'd
concur with that.
Yeah, so that's where I think a lot of the gold bulls will probably ignore anything. And if it comes down to that point, they'll be quite happy to buy up. To meet the trend line is not until 2025. So I wonder whether that particular line in the sand might be in play.
That we will see, of course.
Yeah. When it comes down to some of the other things that are 1680 for Lewis. 1680, that might well be on the. That's probably there. That's on the spot price, I think. The other thing, obviously in focus right now, is the euro, and the euro, because if the likes of the Bank of Canada are pausing, the Fed may pause. I mean, it's unlikely at this stage, but at some point, the euro's still got quite a bit of catch up to do. But massive weakness in the structure of the economy, of the economic picture in Europe, and the biggest issue that Europe also now have is China coming in and saying, actually, things aren't as rosy as we thought. The kind of COVID restrictions that were predicted to enable China to start opening up, and the world being kind of saved by China, looks like that kind of that hope has disappeared, and that does affect the euro as one of the biggest clients of the Chinese economy. So the euro is in focus, mate. I would love to sell the euro, but you can't really do that with the fact that they are at interest rates so much lower than everybody else, with inflation nearer the highs of where everybody else is. So the euro is a tricky beast right now.
Yeah, technically, as I said, when we saw that monthly candle fall, even before that, if you go to the euro and put your trade line from November 2016 through March 2020, which you can see there very clearly.
16 November.
Yeah, there.
Here.
The lowest low. Yeah, there.
Yeah.
And then you got a massive game changer bar last month, right? At that level.
Yeah.
So, the only thing I'm waiting for here is an opportunity to sell it, frankly. This is versus the dollar, of course. And, as you pointed out, a lot's going to depend on what happens tomorrow. But, I find it incredibly difficult not to be attracted to euro dollar downside at the moment.
Yeah.
Because of that chart. I mean, that chart's just telling me, it's just screaming out to be 104.50 or 104. So, in the opportunity to trade it, I reckon that's what I'll be doing.
Down here. 104.50. Oh, yeah. Yeah, definitely looks like it's got some room, isn't it? Yeah, that does look good, mate. I see it.
Yeah. If you go even wider, it's got history way beyond that as well.
Over here.
Yeah.
Actually, one there as well.
And of course, what would that give us, Ash? What would that give us down there?
An inverted head and shoulders. I mean,
you bet it would.
Yeah. I mean, it's running out of time to get there, but
so of course that's setting up for my major thesis, which of course is the dollar disappears off the planet at some stage.
yeah,
And if that happens, that's a monthly chart. That's going to look pretty awesome if that forms and actually plays out. That'd be pretty cool.
yeah. It does look like that, doesn't it? What's this trend line doing here? Actually brings us down. Whoops. Actually brings us down a little bit lower. And that brings us down, depending on when it happens. Oof. I mean, if this happened this month, 240 drop. So
well, that can happen as a result of NFP.
It could. When it could, so we're looking at a 2.5 cents drop. So yeah, I mean actually it's only a 2% drop. A 2% drop in the month could happen. It definitely could happen in this, and that would bring the buyers in, I would have thought, without question at this level.
Yeah, I believe so. Yeah.
And probably would coincide with the possibility of maybe some weakness in the dollar because of the Fed, and possible strength in the euro because of the ECB kind of like needing to stay on a slightly different path. Actually, I'm just going to tighten this line up a little bit because it looks like it might be a little bit higher. Yeah, no, it's
getting interested now, aren't I?
Yeah, I mean, it does suggest as well that, because this is the target, it does suggest that if anybody can get in, and this is I suppose something that George was talking about the other day. If you're able to get into a trade like this, then you have things to add to right the way down to this point here. Your expectation for a longer term move means that there's possible additions to this. And so far, what we've had is this here. So maybe you've got into a trade in this area, it's come down. Maybe you've got into a trade in this area and it's come down. You'd really want it to go through, come back again, another trade into that area, and it could come down. But it does look pretty good, mate. It's got to be said. Even on the daily, it looks like a decent level because of this here and this over here. Looks like a decent level. And that's 103.30.
Look, you've even got head and shoulders on that chart.
You've even got head and shoulders on this chart. Yeah. There's quite a lot actually, isn't there? You look at this along here.
Break and retest there would be interesting, wouldn't
it? It would. And this is the thing about the euro. We're looking at it against the dollar, and of course the dollar is the strongest currency right now because of the data, and that would push it down. But because of what's been going on with the yen, surprising strength with the yen, there may well be an opportunity to look at the euro versus other things. It might well be that we look at the euro against things like the CAD, against things like the Aussie, against things like the Kiwi, because if this is coming down because all of a sudden the interest rate kind of chatter eases up a little bit, then you'd start to look at the stronger looking economies, against the euro, forgetting the interest rate thing. You just look at the stronger economies, and that would suggest actually, Kiwi, Aussie, and CAD may well be something that could be potentially.
Yeah, there's a bit of room against the CAD, but Euro Aussie's overbought. Not sure about Euro Kiwi. I haven't looked at that, but Euro Aussie's definitely overbought. Euro CAD's at resistance. It's tough. It's on those pairs.
Yeah, Euro Kiwi. Last week's bar was very negative. Top end of the range as well on Euro Kiwi. Not quite there, maybe. Depends on where you put the line, but it's definitely sort of like getting near a potential reversal area. Nothing yet that would suggest downside. We've still got this kind of channel which is pretty positive looking. It's not even that, actually. Looks like we got this.
Yeah, you're up the top. I reckon the dominant chart pattern is a broadening price pattern on the the weekly. I think it's the weekly. Yeah.
Little W bottoming pattern in here as well. I mean, on the weekly, actually, it looks pretty bullish. Even though you got yeah, that could sort of still see some upside. This bar is the one of interest.
Yeah, I think it's in a position that's too tough to call at the moment.
Yeah, I agree, mate. I agree. And fundamentally it is as well, you know. There was something I was just about to look at with this.
Casual, sorry, I've seen your comment, and you're absolutely right. There is CAD news tomorrow, and no, the CAD's not looking good at all. I agree 100%. It needs an injection of something. Maybe a bit of go juice.
Do you know what I think with the CAD? The trade balances were good yesterday as well from Canada. Do you know what I think it is with the CAD? I think that now they've held interest rates where they are. I'd be surprised if anything really happens too positively for the Canadian dollar until the others suggest or actually move to play catch up. Then I think it's the currency. Yeah, I think it's the currency because the data is actually pretty good. You know, the Canadian economy is pretty good. If you compare the Canadian economy to the UK or to the euro, it's head and shoulders above those guys. But the reason that the CAD's going to continue to potentially continue to weaken is because they've now gone, we're done. You know, we're finished here. So just the carry trade would suggest that you can now take your money out of Canada and then sort of like start pushing it towards somewhere like the Eurozone.
Although that said, they're at 4.5, aren't they, or something?
Yes.
So yeah, they're still right up there.
Yes, they are. They are right up there. But I suppose if you think that the BOJ are about to move, then you're actually going to get something positive on the other side because that's going to stay stationary while the other one gives you sort of like something
as you say, unless they take a lead off the BOC, and then the game changes again. So
exactly, and that's I suppose that's the thing about the CAD is that it's a really attractive looking currency if you wait. If you wait it out, because actually the economy is in pretty good shape, but now because of policy, they're probably gonna have some weakness, which actually creates a decent price point. I mean, you look at the pound versus the CAD. The pound has managed to rally relatively well, and there might be a little bit further to go. You know, you look at that. There might be one more look at these highs, but after it has looked at those highs, then all of a sudden the pound CAD looks like a decent place to try and sell this one off. Lower end of the long term range, really there. Actually, it's probably there, but that area down there looks like it may well at least edge towards after a push into this area. So you're looking at much longer term. But now I think that the BOC have done what they've done. There's a chance that other things strengthen against it. But I think after that, when the terrain kind of levels back up again, the CAD's I think going to be one of the stronger currencies to buy.
Yeah, obviously I'm a little bit early. You might be a bit early, mate.
Yeah. I mean, to be fair, the Swissie's actually okay. You know, I mean, if you were sort of like thinking about other economies, the only thing with the S&B is that they are notoriously dovish and historically dovish because they kind of have to be, you know, to remain competitive. So they were always going to want a weaker currency if they can get it. And if they can get it without any kind of involvement from them, then all the better. So that's the only thing with those guys. But actually, if you look at the economic picture of Switzerland, it's in good shape. You know, they're not in relatively speaking, they're in pretty good shape. You know, obviously when you're sort of like looking at interest rates, S&B's at 1%. The BOC's at 4.5, which would suggest S&B's got some room. And you look at the data, and it looks like they do have as well. But the big question really always comes in: do they really want that space because they don't want a strong, too strong a currency?
We shall see how that pans out, and I've got to say, I'd much rather be on the other side of this trade at the moment. But in God and the Canadian dollar, we trust. It's as simple as
that. Yeah, I don't know what's going on with my pound Kiwi, but probably something similar. Oh, look at that, mate! I mean, geez, that really did. Would have messed us up if we'd put stops here. The fact that it hasn't kind of come through this trend line is good. Stop there and it's come back, so that's okay. And long may that continue. Looks like those stops are just about in the right place. So if this does take this out, it probably is going higher because it's going to take out the move up, and it looks like that was probably quite aggressive. Yeah, it was pretty aggressive up, pretty aggressive down. It takes out that high. It's probably going, so that stop's probably in the right place. I would suspect. But I'm going to leave it where it is, mate. See what happens. We got data from the UK in about 50 minutes or so. Nothing hugely market moving, so I'm not sure what drove this in the way that it's been driven. Maybe some catch up. I'm not sure. Yeah, I don't see anything else. Well, I might have to do a bit of digging.
End of the day, it's top to bottom of the range, really. So not a lot going on.
No, not right now, mate. No, not right now. Not quite as comfortable with it. Looks messy, doesn't it? I don't like these kind of charts at all. You know, in fact that looks all right when you look at this. It did close. This is where we talked about this closing below that level. Looks like this trend is still intact. Potentially a better price point. I wouldn't go short here personally because of this 15, but there might be a better price point coming in later on. But looks like I was a bit early for this trade. But still a chance. I still think there's a decent chance we do okay out of this.
All right, I will share that exact chart and show you what I think. And I'm going to join you. What's the time? We've got 48 minutes to go, right, before change of candles on the 4-hour chart. So if pound Kiwi closes as is, I'm going to join you, but I'll be joining you underneath the 4-hour candle. Cool. And I'll put my stop loss just above here. But I'll be looking for more than you. I'll be taking profit here for sure, but I'll be looking for this level.
Yeah.
So let's see how that pans out.
Yeah.
The other ones, just repeating what I'm watching, and Kiwi Yen is one. And at the end of the day, daily chart has done exactly what I didn't want it to do just yet. But unbelievable. This was a clear opportunity for a false break, and I can't remember why I wasn't taking it. But there's a reason. There's definitely a reason. I wanted to go long, that's right. Okay. The reason I wanted to go long because I'm playing market structures, which suggests to me that this needs to go up here at some stage. Not necessarily now, and that looks to be playing out as that false break. Hope it doesn't for me, so I can get in the long. Euro Aussie again. We've spoken about this pretty much throughout the show. Have I got a setup here? Is the question. And I hate this conglomeration of candles at a level because it means uncertainty. And I need this to pull away from here now. It's not where I need it to be. I need to change that trade line to there, or even there, same thing. So the only way I'm going to trade this short now is price comes back up here and gives me the false break of resistance that I need. There are some slingshot candles here that are suggesting that it's going to break out short, but I don't like this conglomeration right here. Maybe on the 4-hour chart it looks a bit different, but it's not a 4-hour trade line, so I can't trade it. The last one, and may or may not set up, like I said, is Aussie Swissy. Aussie Swissy, we've spoken about the Swissy at length. We've spoken about the CAD at length. We haven't really spoken about Aussie Swissy at length. This is looking prime to me. Nice little double bottom there on the 4-hour chart. Lovely little triple bottom there on the daily chart. On the weekly chart, you can see that that level is so strong. And like I said from the outset, if Aussie Swissy breaks below this level, or even closes below this level, it's lookout time, because that's a chasm. There's just a whopping great hole underneath Aussie Swissy here. So I'm not expecting that to break quickly. If it breaks at all, I am expecting price to come back above here and at least fill the top of that range. So anything that looks like a long here, I'm willing to take it. The double bottom on the 4-hour chart only needs to be confirmed by a higher low here, and I will trade Aussie Swissy long. Yes, I know that will double up my risk on CAD Swiss, but I'm only 0.25% on CAD Swiss, so it's not the end of the world, right? I can add another quarter here or even another half here. It's no big deal. So Aussie Swissy, I think, is the best potential trade coming up.
Yeah, just remember what we said at the start of the show, mate. We don't want to see you expose yourself.
Indeed, we do not. It's too cold anyway at the end of the day. This one, Euro Aussie. I always like to leave you with Euro Aussie, but I think the edge has been taken away from me for the day. That edge, of course, is that we want to trade back to the daily pivot if we're above or below it. And right now, all I see is a whole heap of garbage here on euro dollar. Have I got a bias, euro dollar? Look, yes, I do. Oh, pardon me. Oh, I'm dying. Sorry.
not those. It's
I hope I'm not blowing your eardrums out.
Yeah, you're all right, mate.
And the bias is definitely short on euro dollar, as I've pointed out as showed you that monthly chart.
Do you think there's a trend line there, just one further on, mate? I don't know whether that would, when you look on that daily, is it on the daily? Well, you're now the day. What was the previous? Yeah, that one there. Do you see that?
That's
that one. There's one little tip. There's one little low just before the low you've got. In fact, it is the low just before the low. Yeah, that one there.
Here.
Trend line there. Does that take us under? Does that take the trend line above price or not? No, not quite. It's pretty tight, isn't it?
Yeah, it's an interesting view, I've got to say. And on a 4-hour chart, that's going to look a whole lot like a potential false break of that line. Is that why you're pointing that out?
Yeah, yeah.
Hang on, I'll go wider. Can't really. Yeah, look, honestly, to me, if I've got to go back 2 or 3 months to find that low on a 4-hour chart, it's not really relevant to me.
Yeah.
Daily chart different, but 4-hour chart.
I mean, that does look like look head and shoulders sort of forming there, doesn't it? Which does actually suggest some upside. Yeah, so some upside to get into that right shoulder area.
I want to sell it. I just want to sell it. I don't see an opportunity to sell it at the moment. I must be fair income. So I guess the best case scenario for me is that price gets up to here.
Yeah, that would start looking good.
Yep. So there's no trade here at the moment for me. Certainly, as I said before, the edge is gone. We can't trade to the daily pivot because it's been all over the daily pivot 3, 4, 5 times at the end of the day. So I'm going to leave it there with those few ideas. Kiwi yen, pound Kiwi, Euro Aussie, and I think the best one is Aussie Swissy. But obviously I'm looking for that higher low before it sets up.
Let's hope the best one's the pound kiwi. That's the one I'm with you, mate. Keep an eye on it, mate. It's actually coming back now. Coming back quite aggressively.
I don't want it to come back yet. I want it to close on the 4-hour chart so I can get into it, right?
You haven't got long, though. Only 40 minutes.
Yep, 40 minutes to go.
Yeah.
Hey, listen, have a good weekend, mate.
Yeah, you too, buddy. You too. Have a good one. And everybody in the room, have a good one too. We'll be back Monday, I suppose, with George. Got quite a few bank holidays coming up, mate, to be aware of. I'm going to need to put that in the Skype because May, there's three bank holiday Mondays. Yeah. The King's Coronation, and then you got the May days either end of the month, and of course Easter as well. We need to discuss what we're going to do about the Easter thing as well, because we got a bank holiday Monday for Easter, and I think that's it. We've got about 4 coming up over the next couple of months.
I've actually got one this Monday. It's nothing to do with markets, of course, but there's a Monday here. So, yeah, it's all over the place for summer. April is a crazy month for birthdays here and bank holidays. And, yeah. But, look, we just have to follow the rules. And if there's a pound or a UK bank holiday, we don't trade. So
no, we'll be in. Well, yeah, the market's closed our end, so can't do a lot about that. Yeah, we won't be here. All right. Well, I'll put the dates in, mate, and then we'll make sure that James gets it out to everybody in the room, so you guys are aware.
Happy daylight where, Harry, at the end of the month? Harry.
Oh, here. It's going to be daylight here as well.
Oh, is it? Okay. Yeah, well, as soon as that changes, then we change.
Yeah.
So yes, to those of you who have joined our Trading Buddy show today, we will definitely be changing times depending on where you are. Well, not depending on where you are. We'll be changing times. It will coincide with what?
27th of March. 27th of March will be the Monday that will be the first affected. So we're looking at 3 Mondays' time, the 3rd Monday from now.
Right. So we will adjust our times with Trading Buddies to suit that, but it will coincide with London Open at 0800 GMT +1. Is that right?
Yes.
I think so.
That is right.
Yep. Okay. So for most of us, that will mean an earlier time, I think. But work it out. You'll work it out.
Yeah. Pretty sure it is earlier. 3 o'clock p.m. 3 p.m. Sing.
Yeah, Gary, 1800 for us. That's right. Hang on, it's 1800 now, isn't it? No, it's not. It's 1900 now. Yeah, cool. It will be 1800 for Aussie people and those of us underneath the Southern Cross. I'm out of here.
Bye, buddy. Have a good weekend, guys.
Thanks for being our Trading Buddies, everyone. Look forward to your company again on Monday. Have a great weekend. Bye-bye for now. See ya.